Hey guys, JD here. I thought today I would do a old school chart lesson where we just looking at a snapshot of a chart. You know, I'm not in a trade or looking to take a trade or, you know, talking it out like normal, but this would be something different. So that's moving a little bit slower. So maybe we can see how things set up in real time. So, you know, I'm just gonna start at the bottom of the chart, and sorry, the screenshot cut it off, but this was a matching bottom right here. So after this matching bottom, we pushed up past the EMA, but there was really no entries. This was just all one leg up, and then we pulled back. So as soon as we pull back right here, what that makes is a higher low setup, because here's a low and then we get a higher low. If you get a beautiful signal candle like such, after a candle like this that can make the higher low, that's a go. And this was a beauty. I mean, that's a beautiful signal candle, closed on its top. That's everything a signal candle should be. The stem is under the EMA, the body is above the EMA. That's everything a signal candle should be. So it broke lower first, closed on the top. That's everything a signal candle should be. And what's the results? 1, 2, 3, easy win. So let's put an arrow on that boy. So yeah, so this is your first entry for sure. Beauty. Oops. And let's call it, let's name it too, because it actually has a name. That is a higher low entry. Okay. Then we keep on trucking up. And then after we get 1, 2, 3, 4, 5, 6, 7 in a row, the next setup is more than likely, and you know, with this kind of strength, you're already anticipating a rally-based rally. So once I get this little attempt lower that couldn't even close really under the candle to the left, I'm sitting and chomping at the bit, knowing that a rally-based rally is coming. Now, in my case, I had this range already drawn sitting here, so I would have been a little bit more conservative because of that. But if this range wasn't here and I saw these 7 in a row and one little baby red, and this one broke lower and then start heading up, and I didn't see it, but I'm sure this thing probably headed up with some momentum, I would have entered actually as soon as it crossed. As soon as it crossed this stem, I would have been in, anticipating that we're going to get a rally-based rally. And we see the results. You know, it shot up 1, 2, 3. So even if you waited for the close on this rally-based rally, you would have won 1, 2, 3. I would have got in early. It would have been a home run hitter. So let's mark that one up. And let's name it. That would have been a rally base rally. Okay, then we would have steady been heading up. At this point, you can draw a trend line if you want, or how I basically you normally do it is just wait for something back off the EMA. So we would have came back off the EMA, we would have broke under, made another matching bottom. So this is actually a clue that we're going higher. Unfortunately, this was such a beautiful candle off of the bottom of this range, closed above the EMA. I probably would have took this and it would have lost 1, 2, 3. That would have lost, unfortunately. But knowing myself, I probably would have took that. That would have lost. But another way that I could have looked at this was matching bottom, then wait for a lower high, which happened right here. So depending on how you take it, you know, taking this candle was kind of aggressive. After the matching bottoms, I really should have waited for a higher low, which would have been this candle, and this would have been a signal candle, but this would have been a shaky signal candle. But once I saw this one break higher, I would have entered once it crossed there. So on this one, we're just gonna mark it again. We're gonna say that really I should have entered here. Not a great signal candle, but you know, there, I'll just make it big for both entrances, because you get in here or here, either one would have worked. And what you have again is another low, say low, swing up, come back higher, low, wait for a good signal candle, you go with that. So let's name that one too. So this is a higher low entry, another higher low entry. So yeah, so I would have, you know, if I lost here, I would have, it wouldn't have phased me. I'm already up 2, so I would have went right back in on this and would have got it right back. So we entered a higher low here, works like a charm. 1, 2, 3, and then we're trending up again. Lo and behold, we get a repeat pattern. Look at this: run up, base, run up, rally, base, rally. I mean, I would have saw that. I would have been not necessarily anticipating it, but after I saw 1, 2, 3, 4, and look how they closed. You know, closed on this top, open on the bottom, didn't go down at all, nearly closed on the top. Open on the bottom, didn't go down at all, nearly closed on the top. See how that was stair stepping with no stems under it? That's strong momentum. So once I got some stem and it couldn't again hardly close lower than the candle to the left of it, I would have been thinking rally, base, rally. And then what we get? A beautiful signal candle. Almost everything a signal candle should be, just like the one we got down here. Broke lower and nearly closed on its top. Beautiful candle. I take this candle right here, yep, I take that boy right there, and we get another rally, base, rally, win. And it was just a repeat pattern. I mean, it was just a huge repeat pattern. What a run. Then we get, since I already had this range drawn, what do we get up here? Breakout, pullback. Look at that beautiful signal candle to close back above the range. What's that? That's our breakout pullback entry. 1, 2, 3. What a one. So let's put an arrow there. Would have taken this one. And let's name it. It's a breakout pullback. It's a breakout pullback entry. All right. Then once we get up here, these tops didn't quite match, but you know, when you get a breakout pullback, it should go. It should travel. If it does out pretty quick like this, maybe it's going to actually turn into a failure, which kind of can call this it worked, but it's also kind of a failure too, because prices didn't keep going. But since I understand the microcycle, I'm already thinking that prices should be about to turn around here. Why? Because we've already had a trend up, a trend break, and a retest to a new high. So I'm not pushing after this. This trade here is kind of risky. This one here is kind of risky because you've already made the new high once you crossed back here. So it's time to start being very conservative, thinking that the market could change directions. And that's exactly what it did. And so what you could do is, if you notice this and you already realize that we've had a trend up, trend break, and a retest to a new high, you're looking for the reversal. And if you're looking for the reversal, then what you see is a high, push down, try it again, lower high. You didn't get a good signal candle, but if you take this 1, 2, 3, easy win. I'm gonna mark that up. You got the high, the lower high, and again, this signal candle isn't good. Oops. Yeah, that signal candle is not good by any stretch. It's probably one I would skip unless I was real confident that that lower high was gonna work. But you know, how do you know? But since we've had such a run up, I kind of would be thinking it may work. So yep, you go on this candle at the close, and maybe you went early because it shot down, looked like it probably shot down hard and put up at the end. So yeah, you might have went on the engulfing bar and entered right here. Either way, you had a win. 1, 2. Well, it all depends on the timing of this candle. So yeah, it's better to let this one close. This candle might have cost you to lose because you were already in early from here. So this is tricky. This is tricky, but this is how you change directions though. After you realize you had a trend break, retest a new high, we're probably gonna be changing direction soon. We've had 2 great legs up, so it's probably time to either range or reverse. But you could take this one. You know, it's very, very aggressive just because it doesn't look great. But that trade is I don't know what happened to my, that's a lower high entry. I don't know what happened to my size here. Come on, paint. That is a lower high. That's a lower high entry, which just brings us into this chop, which you just stay out of. I did watch this happen, and this was another high. Push down, came up, lower high, and so you get another lower high entry right here. Expecting prices to go lower. You're really expecting prices to go lower now because we came back, chopped around, couldn't go any higher. So we had a high here, lower high, and then it again, high, lower high. This time you get a huge, nice signal candle that broke under the EMA, nearly made new lows. So you take this one. Again, you get another, let's put a name on it. This again is a lower high entry. So you take that going short, and it would have won. I know I don't have it on this picture, but it won easily too. It plummeted because it was time to change directions. And so that is our chart reading lesson of the day. And so in this, there was 1, 2, 3, 4, 5, 6, 7, 8 trades, and 7 of them would have won. That's price action trading right there at its best. And it's available. These trades show up in the market over and over again, each and every day. The same patterns, the same results. All you have to do is practice. Which is why I've also recorded this video. This is how I practice. I take a screenshot of the chart of my day, of my daily trading, and I go over the trades I took, go over the trades I skipped, go over the, look at the ones that won, look at the ones that lost, try to figure out what I read wrong, because price action works. So typically if you lose a trade and you really look over it, you will see, oh, I kind of missed that. I probably shouldn't have taken that because of this. Just like this one right here. This loss was too aggressive. And that was all one leg down. So really what I should have been waiting for was a second entry long, which triggered right here, and I would have won. So this is all basically one leg down. That's just a hard push down. Then we pushed up. Many times it's gonna attempt two times. The rule of 2 should have kept me out of this because we only had one push down. I should have waited for the second push down, which would have created the higher low entry. So this trade right here could have been avoided, but you don't know that unless you study your charts at the end of the day. But now tomorrow, I'm not taking an entry like that. I would think like, nope, let me at least see 2 legs back. Let me see 2 red legs back. then it'll be time to go. And so the second this 2 legs back created, starting from the top, first entry, that's a second entry long, right off the bottom of the range. You know, the top of the range is here. This was the trade to take. This was a loser, and that's why. So studying your charts every day will allow you to read the market better. It'll allow you to see the trades and point them out, and it will help you become better and better and better. Practice, 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 practice. So again, my name is JD. I put a link in the description for Pocket Options to try this on a demo. There's also a new link in the description to take my new course, IOTS, Price Action Trading System, where you can learn about all of these setups, all of these trades, and how the market really works. So grab the course, grab a demo account, and let's get trading. And as always, I wish you increase on the Sutton. Bye-bye.
We would like to thank you for tuning in to another Increase episode with JD. If you want to learn how to price action trade, please visit www.jdhyder.com and you will find his brand new course, IOTS, Price Action Trading System. We thank you again, and as always, we wish you increase on the Sutton.